Hello, welcome to Trading the Trend. My name is James Boyd. Happy Thursday to you. I'm in Salt Lake City. It is cold and the snow might be coming today. So I'm going to stay inside the house. I don't know how many of you are ready for spring, but I am. So just real quick, we'd like to welcome Jack, Bill in Siberia, okay, Amun, Debbie, David, Sharon, Scott, aloha back to you, Frank, and many others. Welcome to all. We have Brent Moores in the chat, a fellow instructor. We welcome him here as well. Let's go ahead and hop right in. The question of week we ask ourselves every week is, what trends are we riding? So we always want to kind of take inventory of, are we in some of those trends we want to be in? Are you riding trends that maybe you wish you weren't in? Okay. We want to talk about what are some of those trends? Where are they? How do we find them? And also kind of talk about maybe adjustments to the portfolio. Maybe there's some positions that really don't meet the requirements anymore to kind of really be in the portfolio. And sometimes the answer is to say goodbye, okay, to some of the stocks that just are not trending anymore, okay? And I think that's the hardest part is when does maybe the investor decide it's over, okay? Now, remember, as we get started, when we talk about examples, we'll talk about stocks, but we will also bring up options occasionally. Remember that options carry a high level of risk, not suitable for all investors. The information provided here is for general informational purposes only. Now, this class is on investing. So if we talk about investing, that's going to be the topic. When you talk about investing, it could be analysis, like fundamental analysis, technical analysis. The class is on investing. Okay, so I just want to make sure that's clear. Also remember that when we talk about technical analysis, there's other approaches like fundamental analysis, macro, market analysis, all of the above that the investor could use in combination to try to make a decision, okay, or not to. And also remember when we talk about examples, they are just examples. They're not recommendations. I do ask that you paper trade alongside this. That way you can kind of get a sense on the paper money account how the trades strategies could work. Is it something you would consider? Remember that investing involves risk, including loss of principal. Remember when we talk about options, remember the option Greeks and the options that we will be talking about are American style options, which just means if they're short options like short calls, short puts, those could be assigned prior to expiration. Know what that means, okay? And also quick heads up, coming up in Scottsdale, but a lot warmer than Salt Lake. 7th and 8th, we're going to be at the Phoenician for the Technical Analysis Option Strategy Workshop. Chicago, okay, and the Renaissance Schaumburg, okay, 21st and 22nd. Join us. You'll see up at the very top, schwab.com/events. These are free events. You really just invest your time, okay? But they're free to Schwab clients. And also remember, we'll be also in Detroit as well, and that is April 11th and 12th. Join us. Now, here's the deal. There's not an unlimited capacity. So there's a set capacity and might move a little bit, but first come, first kind of serve. And that literally does mean that, if 10,000 people want to join us, we're not going to rent out the Lions facility, okay? These are at hotels, and the hotels have walls. So if you're really interested, get on there as soon as possible at schwab.com/events. Check it out. So let's go ahead here and kind of talk about markets here as we talk about investing. So first off, we always like to do top down. We'll talk about kind of where the current markets are, where are the trends, how do we find them, and monitor them. We have a set process of what we do. We don't wake up and say, geez, I wonder what I'm going to do today. We have a set methodology. We're always going to start at the top first. Now, I want to kind of just say something in regards to futures. Not going to pull up the futures charts. Today, I just want to make mention, the U.S. dollar today did what? U.S. dollar today dropped somewhat. If the U.S. dollar dropped, what might you expect to maybe potentially rise if there's a potential inverse correlation to the U.S. dollar? What is it? Hand it over. Well, you might think gold, okay? You might pull up the gold itself, okay? The price of gold, okay? Something else we might say is precious metals in general. We'll say copper. Keep an eye on copper, okay? Now, this is not a futures class, so I'm not bringing them up. I'm just speaking to them. And the last one that I actually just want to kind of point out is, so copper and gold, and keep an eye on the U.S. dollar. Last week on Wednesday, we talked about equity tailwinds. And we said sometimes you can get the U.S. dollar to go down, which helps stocks, okay, especially international companies that are selling abroad. And also keep an eye when we take a look at, let's say, the VIX. Let's start here. The VIX is sitting here about 15, pasted, cemented, kind of having just a struggle here. Now, if you're a bullish investor, you kind of like the VIX low. I want you to imagine you're on a lake, you're boating, and the water is just pristine. I mean, it's just like glass. And when the VIX is low levels, think of it as like low rips in the current, right? And if you take a look at this, this is not a bad thing to kind of see the VIX kind of in that red, and I'm talking about right up here. Now, when you look at the NASDAQ on Tuesday, we talked about the NASDAQ was the one that was the leader. You remember that? Okay, good. Now, if you look at the NASDAQ, when we look at percentage-wise, it's the NASDAQ leading and the semiconductors. Now, I put the semiconductors in there as well, okay? Feel free to, by the way, make a list of this yourself so we could do the routine together, okay? That'd be helpful. Now, if you take a look at this, so the NASDAQ, I'll pull up that chart in a sec, it is still showing relative strength. Now, when we talk about the NASDAQ going up, we know the NASDAQ is heavily weighted, the S&P 500 is heavily weighted to what sector? That's correct. Basic materials. No, it's not. Second guess. Utilities. No, it is not. Strike two. Now we don't want to swing again. We know that if someone buys, let's say, the S&P 500, it's heavily weighted to NASDAQ stocks. So if you take a look at this, what are the 1 and 2 sectors we see that are standing out without even looking at the chart? It's NASDAQ number 1 and S&P number 2. Now, when you look at the Dow Jones itself, or the Russell here, they're there. They're just not really doing a whole lot. When you also take a look at the color of the moving averages, they are in red. So remember, these columns right here, 10HC, the 10-hole counter, the 20-hole counter, those are telling us what are the colors of the moving averages. The numbers in the boxes it's counting the number of days. Okay, so if we said which indexes have green moving averages, answer NASDAQ, S&P. If you're a bullish investor, they might be looking for that. Now, I want to speak to that for just a sec. That's not to say that some investors like to buy on pullbacks and might like to buy into weakness down near horizontal support. We're not saying the investor never buys when the moving averages are red, but you got to realize there's risk to that because, well, maybe it's not going back up yet. You're buying at a price level. If someone's buying when the moving average is already green and they've been going up, you're really buying on current momentum and trend and thinking maybe it might continue. All right. Now, when we pull up these charts, I want to just pull up NASDAQ real quick. And if we pull up just real quick, NASDAQ, I want to pull up the chart that we talked about yesterday on the fundamental class, okay? Remember we talked about kind of the 3 things that are really important. Looking at the percentage movement, looking at the levels, and then looking at the point movement. So many people actually do that inverse, okay? They look at how many points it goes up or down. Well, that might not really be applicable because every 1 point's not the same. You pick a $10 stock, you pick a $1,000 index, 1 point's not the same. So we want to look at the percentage movement, where the levels are, support, resistance, and then the point movement. Now you might say, well, the point movement is related to the percentage. That's why we're going to look at percentage first. Now, what I want to do is let's kind of pull up that 3-year weekly. Now, if you look at this chart, calling all technicians out there, what type of price pattern do we actually see on the weekly chart on the NASDAQ? Now, there's been a lot of negative investors out there. I mean, there's concern about this, concern about that. Everyone can actually have their own point of view. But the investor who's trying to ride the trend is trying to go with the dominant sentiment. There's always a minority out there, right? Well, if we go back and really take a look at this, horizontal resistance there, we're still hitting that. But then underneath, we kind of still have this. We had a recent low, noted. We had a recent pullback where that low was not as low as before. And then right now, we actually see that we're trying to get, let me zoom in so we can see this. Trying to get a little moving average crossover. Now, is this like maybe a telltale sign? When we have the crossover, that crossover did not really last very long. Is that a bearish signal or is that a bullish signal? The bearish crossover, when we actually went to the red shading, that it didn't really last very long. Is that a bullish signal or a bearish signal? Okay. Well, the shallower the pullback, in percentage pullback from the high, the duration of time it pulls back, the shorter that is, the stronger the trend. Okay. Now, and we would also say with that momentum as well. Now, so when you look at the NASDAQ, when we look at this on a daily chart, you're going to kind of see it looks a little bit more, maybe more like a symmetrical triangle. Okay. Something like this. That wasn't bad freehand. Maybe something like this. And what we're seeing is here today is maybe a little breakout. Now, every time something breaks out, we know what someone's going to say. Well, I want to see it pull back and confirm the bounce. Okay. And then they're not watching. So the thing is, the biggest some investors do is they say, look, I'm going to buy some on the breakout day or before it, and then add on the bounce. Some investors use dollar cost averaging. Okay. They're not making 1 point on the chart the ultimate entry. In an upward trend, you're probably going to have multiple entries. Okay. If it's truly upward trending. Now, one thing I want to kind of say just real quick on the sectors, name the sector that hit a brand new high here today. 5, 4, 3, 2, 1. Okay. Now, if we did the routine together, okay, and if we went to sector, now, what I want to do is I want to go over here to this 20, 55-day high. Think of this as, well, obviously, days high. Are we hitting a brand new high? The big thing is also, and by the way, are we at it? So if we actually said what sector today hit a brand new shorter term high? Well, one of them is Staples. We've talked about that. But the other one that I kind of want to point out here that has been in the green for a while is communications. We haven't talked about that. Really? Okay. Okay. Now, communications today, okay, did actually hit a brand new high on the chart. And so let's kind of just point this out, and we're going to look at some examples. When you look at the IXC, okay, dollar sign, IXC, and there it is. It's the index, okay? And what you're now going to notice is if you take a quick peek at that, that did hit a brand new high here today. Now, remember, when you take a look at those would be stocks like Meta, Netflix, by the way, T-Mobile, okay, as well on the list. But keep an eye on those. And when we go back to that, we said, are there any other sectors? Now, I like to rank this by RS5. This is looking at shorter term momentum, okay? Now, lastly, we point this out, technology is there. Staples is there, IXR. And when you look at, let's say, basic materials, let's take a quick look at this. Now, remember, a lot of people like to play correlation. They like to say, hey, if this goes down, what could go up? Or if this goes up, what could go down? There's a relationship there. Well, we want to also keep an eye on that basic materials. If you look at the basic materials, IXB, okay, what you're now going to notice is that's one that's kind of starting to form a flag. And if you look at this, a little run up in the price, a little yank back. And the question that's probably going to get asked here is, how do you know if it's really starting to break out? Well, this is why we talk about drawing the diagonal lines or the horizontal lines. Number one is if the price starts breaking out of the resistance, number one. And then number two is, obviously, if it's starting to break out of resistance, you're probably going to see that green dot as well, showing hold on the chart, okay? Now, if we were to draw this and kind of say what marker on that chart, so if we were to draw resistance, is it diagonal or is it horizontal? That's a question. Is this resistance, is it more diagonal or is it more horizontal? I think if we drew a line, we're going to get a number of touches. We'd probably say, look, if we get above 951 and change, it's probably horizontal, okay? Now, here's the deal. What type of candle is that? Can you have a hammer candle that's red? The answer is yes. What type of candle is this? That's a bullish engulfing candle. So you've had, by the way, if we look at this, if you think they were carving out support, what type of candle is that? That's almost like an inverted hammer. And then you actually go the very next day, hammer. And then you go very next day and you actually get a bullish engulfing. What's the point? Well, the point is that obviously someone's starting to buy the dip, okay, and it's putting pressure on the resistance. So base materials is one sector that we would kind of earmark and kind of say, keep an eye on it, okay? Now, are there any questions here? Any questions? And this is very important because, so let's kind of summarize what we said. Number one, NASDAQ. Number two, S&P 500. We're not saying that the Dow and the Russell are horrible per se. We're just saying they're not as strong. The goal that we're trying to focus on is always pick two indexes that we're going to focus on. And we're going to go look in those baskets. Number two, if we kind of said what are maybe three sectors, five at most, that the investor might be paying attention to? Well, number one is technology, which obviously we said NASDAQ and S&P. If you're bullish at NASDAQ and the S&P, it's kind of like saying you're bullish technology. Now, if we looked at this, we'd probably also say staples, of course, throw out their base materials, and we probably put in their communication. Now, if you're bullish, the S&P 500, you're probably bullish also discretionaries as well. All right. So in 15 minutes with disclosures, we have a foundation. Are there any questions? Okay. Now, James actually says he wants to see the price at 965. So James he's up here. So James, let me throw this out here. Why would you want, and I'm just throwing this out here. James says, I want to see the price go to 965. Why did you say 965 when there's no touches recently of 965? Why not some areas of 955, 950? Why is yours 965? I just want to know. Okay. Let me know on that. All right. Now, let's kind of go back to this just real quick. So I want to kind of just go to analyze just real quick. I'm going to go to, just real quick. Let's go to scan. Let's get a little sense. And let's kind of do this. We'll show it both ways, okay? If I went to analyze and I went to, let's say, Market Watch, and then I'm going to go to visualize, okay? So I don't know about you, but I like to take, if there's a good shortcut, I like to take it, especially if we can do less work and maybe get similar results. I'm going to go Market Watch, visualize, and the point of this is I just want to get an area view of what are some of the stocks that are in those sectors that we just talked about. Now, if I went to the S&P 100, and why the 100? Because there's less stocks, okay? Sometimes more is not better. I just want to kind of get a sense. So there's information technology. There's Apple and NVIDIA. We'll come back to those in just a sec. Financials, BRK, Berkshire Hathaway B shares. We'll probably look at that in just a sec. But when I come to, let's say, consumer staples, Walmart, Costco, Coke, PG, I want to come to that in just a sec. And what you're going to now notice is, where is the other one, basic materials? Problem is, basic materials, that sector, I think it's only 1.5% on the S&P 500. So we're going to have to go to the S&P 500. And the materials section is so small that we can't even see it. Okay? Now, how can we open this up and see a list? Well, when you click on that drop down right there, that little caret, it actually is going to bring us to the materials. And that way we don't have to magnify glass. All right, materials. And then here's the stocks in the S&P 500 that are materials. Now that begs the question. When you pull up the S&P 100, how many material stocks are there in the S&P 100? Answer. There's only one. So if you said, look, I'm trying to make a watch list of material stocks, I'm going to need to actually go to the S&P 500. Dean's question is Sherwin-Williams in base materials? And the answer is, yes, it is. If we actually said, is there any stock that's kind of standing out quite a bit? You're going to see it's Freeport-McMoRan, okay? By the way, copper, gold. NEM, yes. You're going to see that also Smurfit, WestRock, and you're going to see like ALB, PPG, among others, etc. Now, I want to go back to a couple examples here. So notice, did we run a search yet? Didn't. We just used a list of indexes, we used a list of sectors, and then we just used the Market Watch and then visualize. Let's now go to work and look at some examples. Now, what I want to do is I want to come back to just real quick on the NVIDIA front. Now, what you're now going to notice on NVIDIA is NVIDIA had like a base of support at, let's say, 130. Okay. The question came is, are eggs consumer staples? I just paid $12 for a dozen around me very bullish. I'm not kidding when I say that there's two neighbors down the road that they have chickens in their backyards. Okay. And I asked them, I said, what kind of made you have chickens? They're like, I ain't gonna pay no $10 for eggs, you know. So hey, people want to kind of control their own supply. Okay, just it's interesting to have chickens roaming in your backyard, but sure, some people want to do that. Now, I want to kind of come back to this for just a sec. There's a number of stocks. We have NVIDIA that has earnings coming up. I also want to look at a stock PNW that has earnings coming up, BRSK that has earnings coming up, and ZS that has earnings coming up. Now, I want to just take a quick look. Is there any position of NVIDIA that we have? The answer is yes. So in the IRA account, there's two different positions. There's one that's expiring in 8 days, check. And that's a cash secured put. And what you're now going to notice if you take a look at this, we also have one that's going out to, let's say, 36 days, March, and it's still going. Want to go back to the margin account for just a second? If we look at the margin account, we don't have any position there for NVIDIA. I want to use this opportunity in that account to try to see if we can't place a bullish trade on that. Now, we're going to come back to the 21st of March. We're going to go look and see, could the stock stay up above a support level? Now, when we go back and look at NVIDIA on the DeepSeek news, it dropped. Like a lot of news, the smoke clears. And all of a sudden, you kind of find out does a lot of that fear hold? A lot of times it doesn't. It's a reaction, okay? Now, what we're going to do is we're going to try to be a little bit more conservative. If we sell a lower strike, there's a lesser premium. And with the lesser premium, there's less chance of the stock closing below the strike price. We're going to look to sell, let's go look at the 130 for just a moment. The 130 has a 39 delta. Delta, okay, probability of stock be a penny below the strike. Since we're talking about a put. The delta is also saying the change in the option price over the change in the stock price, okay, given a $1 move, approximately, okay? Now, if you take a look at this, if we go down and say, what other strikes do we have? Are they liquid? 128 is liquid. 126 is currently liquid. 50,000 contracts on the 125. Now, what I'm going to do is, let's say the investor said, James, I want to be a little bit more conservative. I don't want to sell the 130. It's a little close. I want to give myself some breathing room. Let's say the investor says, James, what I want to do is I want to sell the 125, okay? And I'm going to look at this, 125, yep. Since we're in the margin account, I'm thinking in my mind, like, what's the risk we could take? Pretty much any risk we've been taking, it's really been about, what, $350 worth of risk? So if we sold the 125, bought the 120, $1.62 credit, confirm send, I'm just taking a look at the numbers, and we get a max loss of 338. In this account, we can do one contract, okay? Now, I know what you're thinking. You're like, I wish I could do 10. Well, got to get more money, okay? Max profit is the credit, okay? And what you're now going to see is that does not include the commission, cost of the trade, including commission. The credit is 162. But you got to remember that max profit does not include the commission, okay? And the buying power effect or max loss is the max loss. So if the stock were to close below both strikes, that's the max loss. Now, why are we selling something like a 125? What's the idea? What's the idea here? Why are we not selling the 130? Well, we're trying to kind of be a little conservative just in case. We're saying, hey, wonder if the price goes down, okay? And we're trying to give ourselves a little bit more room in the paper money account. We're going to go confirm send the order, okay? So in the IRA, we got two different positions. And then in the margin account, we have a put vertical on that. And this is going to be going over earnings. Now, maybe when might the investor not consider holding it over earnings? Well, how much of the gain do they have? Okay. And remember, we kind of follow a simple rule set. Okay. If in the first 10 days the investor could get 50%, they might consider just taking that off or rolling the position if they think it can keep going that direction. Second, if we ever got, let's say, 65% of the match game with 20 days left, they might say, hey, I'm going to take it off or maybe roll a position. If they ever got 80% ever, okay, they might take the game. The only way you get 100% is you go all the way to expiration and or the stock makes a significant move in the intended direction you thought it could go, okay? Now, I also want to go back to, just real quick, just speak to just briefly T-Mobile. Now, we brought this one up. We've traded this one a couple times. I just want to kind of point this out again, that really T-Mobile, big green candle again. Now, you might be thinking, well, geez, what stocks might be in that neighborhood? We know what they are, okay? I mean, we don't need to run a search. If you have a cell phone, we know that there's T-Mobile, there's AT&T, there's Verizon, VZ. And if we kind of said, is there one of these that might have a little bit of a push? It's maybe not so deep to the upside, okay? Well, so this is where you're kind of playing just kind of the stocks that are in the industry group. Is there any type of potential pattern on the chart here? Any type of pattern? Well, I mean, you know how it is with art. Yeah, it's kind of funny. The other day, my wife was sitting in the family room. She goes, how much do you think this painting was? I don't know, $1,000. Flips it over and shows me the tag on the back. I'm like, how is that X amount of money? It just blows my mind. So art is it is truly the eye of the beholder. Now, some of it's really interesting. And other stuff, you're like, really? Okay, now, if we looked at this, we'd probably say there's maybe what we call a shoulder head. Now, if you lived in the South like I did, you don't call it a head, it's a melon, okay? Little fun there. I live in Kentucky, and there's some funny people down there, okay? Now, if we look at this, we're kind of breaching inside this old channel. Now, let's just kind of call this maybe the middle of the channel, like right there, okay? And if we kind of said maybe the top side of that, right there. Now, a lot of times people say, well, I'm not going to take a $40 stock because it's boring. Well, nobody said you had to do it with stock, okay? Wonder if you can kind of try to synthetically replicate the profit loss diagram of a stock position. So what does that even mean? Did you just speak English there? We sure did. So what I'm going to do is I'm just going to pull up VZ. Imagine the investor says, I'm going to buy 100 shares of stock. 100 shares of stock, 100 delta. The 100 delta, so all that is saying is the change in the profit or loss. If the stock goes up $1 and you have 100 shares, how much do you have? Well, you have $100 unrealized gain. The stock goes down $1, how much do you have? Well, you have $100 unrealized loss. Didn't teach you anything. But what we're going to do is, how do you replicate that profit loss without outlaying 100 shares times $40.94 or $4,000? We're trying to get this same line. Now, before we go any further, what's the differences? Well, if we do options, there's expiration. If we do options, we don't have the claim to the dividend. With the options, we also have the bid-ask spread on the call and or the put if you did both. So those are some differences. You could also have assignment risk if you sold the put and so on. So there are differences. Okay, crystal clear? Now, what I'm going to do is I'm going to come to the margin account, and I'm going to go to the margin here. And what I'm going to do is I'm going to imagine that the investor says, you know what? I'm not going to buy the share stock. I'm going to try to synthetically replicate. When I say synthetically replicate, that the profit loss diagrams are the same. Okay? Now, what I'm going to do is I'm going to right-click on that 40. And when you buy the call, what does it give you the right to do? It gives you the right to buy the shares at the strike price. Okay? So you can exercise your right to buy the shares. So when you pay $1.53, you're saying, I want to have the right to buy the shares at 40. Okay? Now, if I buy and then go down to caller synthetic and click on that, what we're going to do in this case is we're going to sell, we're going to buy the 40, which is the right to buy, and we're going to sell the 40. Now, wait, hold on. Now, if we did this, what is that really doing? Well, you got a right and you got an obligation. Now, I am not going to buy the put below in this example. It is a lower price dollar stock. There's still risk of the downside noted. The debit there is $1.12. Okay? So just imagine in our mind for just a second, we got the right to buy the shares at 40, and the net debit there is $1.12. Why'd you say net debit? Well, because you paid that and you collected that. So the net of those two is $1.12. Point being, when we pull this up, we have a right to buy the shares at 40, but it ain't free. We paid $1.12. So the break even today, no, at expiration is at 41.12. Max profit is still infinite. Max loss if the stock went all the way down to 0. Okay. And by the way, you could say that with any stock trade too. And what you're going to notice is there's the commission. Now, what you're now going to notice is we're in a margin account and they're not setting aside the entire amount for the potential assignment of buying the shares at 40 on the put. Now, what we're going to do in this case is, before I do this, let's bring this up and just show this quick diagram. So when I analyze, if I look at the stock trade and I pull this up, you're now going to notice that we have a delta. These are the shares, okay? We have a diagonal line. That slope, think delta, okay? The steeper the slope is, the more money you could potentially make. The steeper the slope is to the downside, the more money that you could lose to the down if the stock were going to go to the downside. Profit loss on the Y vertical here, and on the X axis, what you're going to see is this is the stock price. Now, if I change this out and say, what about the option price, you will still notice that the delta is about what the shares are. Close. And now what you're going to notice is, in this case, the slope is very steep. The steeper the slope, the more you could potentially make or lose. So what I'm going to do on this position, we're going to confirm and send the position. Now, I'm not going to put a target on this one initially. Okay, I want to kind of play this out on a lower price dollar stock. A lot of you might be new and say, hey, how do I get started, etc. We're going to try to, for example, have maybe Verizon move to the upside like T-Mobile is, like T is. This is why you don't want to just maybe know a stock in an industry group. You also want to know maybe who are some of their competitors. And those competitors that aren't doing as well tend to copy the businesses that are doing well, and they try to go more in line with the industry group. Does it always work? It sure doesn't. Okay. But the idea is, if they can replicate what the other successful companies are doing, maybe the stock goes more in line. Okay. Okay. Now, are there any questions with that? Now, Wiley says synthetic with a prenup. I'm not even going anywhere near what that says. I'm smarter than that. Okay. Okay, I'm going to act like I didn't hear that. Now, I want to go back to Apple for just a second, okay? Now, Apple, again, let's take away some of the noise. I think it makes a lot of sense sometimes to not look at the daily chart. Sometimes when you kind of see some vacillation of price action, up, down, go back to the weekly. Get a real sense of what's going on. And if you say, look, I need to even see it clearer than this, we like to use what we call Heikin Ashi candlestick. Now, if we go to that real quick, there's a chart type called Heikin Ashi. Now, if I look at that, I'm just trying to get a sense of what is the trend. Well, in the last couple of months, we started in the lower left. We went to the upper right. There's some type of uptrend, okay? Now, if I look at this, if we kind of just use moving averages by itself, said, hey, are we like late? Are we early? How would you classify that, categorize that? Well, we know that if we're buying or considering buying the stock when there's only one moving average that's green, we know this would be classified or categorized as early. Now, if we saw a cross, we'd say more confirmation. If we actually saw the moving averages, the 10 and the 20 and across, we'd say there's been more confirmation. So if we kind of said, where are we on Apple? We would say we're early. Now, why do some people get in a little early? Well, they get in a little early because they want to buy closer to support. That's why they're trying to get in maybe when the price is still down. The problem is if you're looking for a bounce, you got to get the stock to come up somewhat off that support level to show some signs that buyers are really buying. Now let's kind of take back what I just said, but now on a daily chart. And I'm going to count to 3. Uno. Okay, son lives in Ecuador, so I've been practicing my Spanish. Now, I said, where's number 2? Well, we actually had, or dos. What you're now going to see is, number dos is the 20-period moving average weight, green. And if we actually said number 3, tres, you're going to see right there. So if we look at a daily chart, we see 1, 2, 3. So if someone got in early, they might have said, I got in here. If someone said I got in number 2, they might have got in there. If someone said I got in waiting for more confirmation, which that confirmation ain't free, what does that mean? That means they buy more elevated off support. Okay? Stock is higher off support, meaning some of the move has already happened. Now, what you're going to notice is we kind of have this area right here, about 240. Okay? And there's been a lot of wondering, is China going to retaliate? Are they going to be able to sell abroad their products? And how is Apple going to compete in China with their other phones and so on and so on? So there's been a lot of kind of fear on that. And we're just kind of wondering, could that maybe start to kind of unwind itself? Could maybe some of the fear once they announce earnings, etc., are there any new products or services? Does the company let us know that it's not as bad as feared and so on? And sometimes it is a little overblown, okay? Now, sometimes as people, we kind of tend to overreact. I've never done that, but some people do. Okay, now what I'm going to do is I'm going to go back to this just real quick. And let's say the investor says, now remember, this is a bigger dollar stock. We're going to right click on this. We're going to go to the margin account. From the margin account, to the IRA. Now, what I'm going to do here is I'm going to right click on this chart. When I right click on it, I'm going to go to where it says buy custom with OCO bracket. Now, when we look, I always like to look at the downside first. I'm just kind of a pessimistic person, okay? And when I take a look at this, I'm going to kind of draw like a horizontal line. Where's been some recent lows in the last maybe 2 to 4 weeks, okay? Where there's been some touches there about 227. If we're talking about bodies of candles, okay, maybe 230. Not drastically different, but those are the markers. You might even say, I'm not even going to go that low. I'm going 222 and change. Now, what I'm going to do is I'm going to set a little bit lower stop. Now, we know that if you set like a lower stop, you can typically buy less shares. Now, what we're going to do is we're going to take the 227.58, which is the lower line, less 2%. That's going to give us 223.02. 23.02. Stop date GTC. Now, when we take a look at, let's say, the upside, where might it try to go up to? Now, I'm not saying it's going to do this. I have no earthly idea, and I'm fine with that. I don't know what tomorrow's going to bring. I don't know. Wake up tomorrow and find out. Now, if you take a look at this, these might be some upside potential areas. If you have two lines that are kind of pretty close together, you might just say, look, I don't know which one it could hit or if it will ever hit. I'm going to pick something there in the middle. Now, Scott actually says Apple event on Wednesday, buy the rumor. Okay. Now, there's a little saying that says buy the rumor, sell the news. So in other words, buy the hype, and maybe if they realize it's not as good as they thought, well, they maybe sell it once they realize what it is. Well, what I'm going to do is I'm going to put that target right there. Okay, there. That's why I put in the number there. Data GTC. Now, when we look at the capital size, you want to make sure that capital size is consistent. Okay, 6,500. And if I look at that, it's about 27 shares. I need to be careful when I just do that because I'm position sizing only on a capital amount. So if I looked at this and said, okay, it's $14-ish, 15, about $15.75 of per share risk. And if we're considering on buying 27 shares of stock, could this portfolio handle a loss of $425? And the answer is yes, it can. We're trying to keep all losses less than $500, but we cannot do more than 27 shares. Okay, that's the most we could really do. Might push a little bit, but we're going to stick right to 27 shares. Now what I'm going to do is when I come back to this, we just take that off, type in 27. Okay, there she is. Confirm send. And now what we're going to see is target, stop, and we're going to go ahead and you're going to see that there's a red line with stop orders. There's no guarantee the execution price, what it fills at, will be equal to or near the activation price. Send the order. Okay. Now, I want to go back to something just real quick and kind of just remind us for just a moment. Okay. Now, there's been some questions. Okay. So if you go to, for example, this X page, okay, Brent, if you could type in yours as well. I want to kind of just, there's been some questions, okay? Right at the very top of my X page, I have some scripts. And one of the script that you've asked about that I did apply about an hour ago is the breakout script, okay? So what you're going to now notice is think of this like a menu. You go to the restaurant, you don't order one of everything. So do not feel like you have to eat all these scripts. Just like at a restaurant, you don't have to. This is what's out there. These are some of the things that are out there. At the bottom, you'll see breakout script. And what you're now going to notice is in blue, that's what I need. Okay. That's the code. Now, what I'm going to do is I'm just writing down on a sheet of paper what that code is. Why can I not copy and paste? Well, this is not a doc file. Okay. So what I'm going to do is just real quick show us how do we put that on. And I'm just going to bring this back up. So I'm going to go to setup at the very top right, setup, open shared item. And what you saw on my X page, exclamation point, N-O-E, okay, G-H-T-J-G. Now, sometimes I type it in wrong myself. I'm lucky. If I wrote it down right and I typed it in right, which sometimes I don't, it's saying, hey, someone wants to share a script with you. I'm just going to call this the breakout, and I'll just call it breakout, okay? Now, if I import this now, okay, where did it go? So let me kind of just, this has been a question I just want to make sure I address. How do I know if some of these scripts are on the market watch or the chart? If you want a 10-day whole label counter on the chart, it's color-coded in red. On the chart, how do you see the lows? On the chart. How do I see the whole moving average? On the chart. If it doesn't say on the chart, it's a market watch script. Okay? Now, let's go back to this. Let's go to market watch. Let's go back to a list. Now, what I want to do is, how do I put it on here? These column headings. Right-click on any column heading. Go to customize. And what I'm now going to do is, let me repeat what I just said. Okay. Right click, we're on the market watch quotes. Right click on any column heading. Okay. Click customize. There's breakout. That's what we just put on. And we're just going to add it. Add it. We're going to click right there. And there's breakout right there. So now when I pull this up, if anything is breaking out, okay, you're going to see that there's a continuation breakout from 2 days ago. So this will show something. Let me show like a different list for just a moment. If I pulled up, let's say, perhaps, let's say the NASDAQ, half the list of the NASDAQ, okay, you're going to see that there's a green background. And some of these backgrounds, like, for example, given, one will say today. And the one that says today is breakout today. Well, that's T-Mobile. Okay, today BO. BO is not bad odor, it's breakout. Okay, if you look at that one, the second one, the CTSH, that says continuing 2 days ago. Okay, this will also say 2 days ago, continuing yesterday breakout. So they'll usually tell you within a 3-day window whether they broke out today, broke out yesterday, broke out the day before, or even the day before that. There's a 3-day plus or minus there. There will also even be like a red continuing yesterday breakdown. So the BD is breakdown. Okay. So now, are these guaranteed? No, they're not guaranteed for accuracy or timing. Verify. That's why with any script, you want to really know what is it trying to do. And when you pull up the chart, you can verify that that it's actually screening what you're trying it to see. All right. Now, let me share that with you. I will also put this in the description right in the link today as this class has been recorded. Okay. Now, there it is. Now, I'm out of my time here today. I want you to kind of go out and if you feel like, hey, I struggle with kind of seeing those breakouts, I want you to practice using really the 20-day high, the 55-day high. That is a breakout itself. But you'll also see that there's some correlation. It kind of talks about the timing of the breakout script. Use that breakout script right there. I'll tell you the timing of it. Breakout today, broke out yesterday, or the day before, etc. So those could be used in kind of parallel to the 20-day high breakout and the 55-day high. Okay, I'm out of my time here today. I want to thank you so much for your comments and your participation. Remember, this class has been recorded. Feel free to also check out our live events right at schwab.com. Follow us right on and subscribe right on YouTube. Okay, that way you can see all of our content. And remember, with what we discussed, it was done for example, illustrative purposes only. Stay tuned for our next webcast coming up right at the top of the hour. Thanks to Brent and thanks to all of you. And I'll be back on tomorrow morning as we talk about ETFs with Kevin Horner. With that said, this has been the class on Trading the Trend. Thanks so much. Take care. Bye-bye.